Foreigners cut China debt, dump equities in July. IIF Shanghai foreign investors persevered to cut holdings in Chinese bonds in July and dumped equities for the first time in 4 months, in keeping with a document by way of the Institute of International Finance (IIF). Emerging markets published a fifth instantly month of portfolio outflows, placing the longest such streak in records going back to 2005, as global recession threat, inflation and a strong dollar drew away cash, confirmed the record launched on Wednesday. Chinese debt witnessed outflows of around $3 billion final month, even as $6 billion exited other IIF anticipated. If showed via legitimate data, it'd be the sixth consecutive month of overseas outflows from China's $20 trillion bond market. During the equal period, China's stock market witnessed $3.5 billion of overseas outflows, compared with marginal inflows of $2.5 billion in different markets, IIF introduced. The benchmark CSI 300 index dropped 7%, down each week in July, as home COVID-19 flare-ups, belongings woes and international recession dangers weighed. China's A-shares noticed a range-bound, typically weaker trend, seeing that July beneath both home and distant places effects, China International Capital Corporation (CICC) said in a note. Data showed the world's second-large street economy slowed sharply inside the second area, missing marketplace expectancies with an solely 0.4% boom from a year earlier. With influences from the Ukraine battle still no longer waned, Sino-U.S. tensions over Taiwan installed as U.S. House of Representatives Speaker Nancy Pelosi visited the self-ruled island claimed with the aid of Beijing. For the coming months, numerous elements will influence flows dynamics, among these the timing of inflation peaking and the outlook for the Chinese financial system may be in focus, IIF said. Overseas buyers had been lowering holdings of Chinese bonds in view that February, as diverging financial regulations kept Chinese yields pinned under their U.S. opposite numbers. The People's Bank of China has been easing policy to useful resource a COVID-19 financial system, even as the U.S. Federal Reserve has been hiking costs to combat soaring inflation.